Good morning, I'm Peter Milios from the Finance News Network. The S&P 500 and the Nasdaq both ended the day in the red as investors look to rotate out of the big tech names and into small caps and property. The trigger for the moves was the June CPI print, which came in with the lowest reading in more than 3 years. The S&P 500 finished the day down 0.88% after briefly touching new highs earlier in the day. The Nasdaq fell 1.95%, weighed down by a 5% drop in Nvidia after also hitting a new record highs in early trading. The Dow Jones managed to close in the green and finished the day up 0.08%. The big news of the day was the surge in small caps, with the small cap benchmark Russell 2000 index rallying 3.6% following the June CPI print, which came in lower than expected, which saw investor optimism rise around rate cuts later this year. The June CPI fell 0.1% from May, which pushed the annual inflation rate down to 3%. Consensus numbers from Dow Jones showed economists expected a 0.1% monthly increase and a 3.1% annual rate. Core CPI, which excludes food and energy, came in at 3.3% on an annual basis, also lower than economists expected. US Treasury yields fell following the CPI numbers, with the US 10-year Treasury yield falling 7 basis points to 4.211%. US 2-year Treasury yields fell over 11 basis points to 4.513%. The CME FedWatch tool is now pointing to a 93% chance of a September rate cut. In company-related news, Nvidia shares declined by approximately 5% on Thursday as investors shifted away from mega-cap tech stocks. The AI-focused company's stock was impacted early in the session due to a lower-than-expected June inflation print, which exerted pressure on the broader tech sector. Apple also slipped 2% on the back of Nasdaq's woes. Housing-related shares such as Home Depot and D.R. Horton jumped on hopes that the lower rate environment would reignite the housing market. US sectors were volatile following the CPI print. Real estate was the best performer, closing 2.7% higher, whilst technology was the worst performer, closing 2.7% lower. Turning to the Australian landscape, BHP will suspend nickel mining in Western Australia, warning of a full-year loss on its nickel business due to a global oversupply driven by Chinese-backed companies in Indonesia and the Philippines. This decision puts thousands of jobs at risk and will lead to a US $300 million non-cash impairment charge. Despite significant investments to reorient production towards the battery and electric vehicle market, lower global nickel prices have resulted in ongoing negative cash flows for BHP's Western Australian nickel operation. The SPI futures are pointing to a 0.6% gain. Thank you for listening and have a great weekend.